Ashwini, the question that I have is that would you prefer for companies where the valuations are very supportive and there is earnings growth, or would companies wherein valuations are still pretty punchy but they are showing earnings growth might also gain? How are you kind of thinking between this conundrum?
I think the answer lies in ownership. Okay. I think there are some stocks, some themes which have been extremely well owned over the last 5 years, dare say a decade. And I think as interest rates normalize, as growth outlook normalizes, some of these really well-owned themes will not work. I don't think it's going to be a massive positive inflow year for foreign investors, given India's punchy valuations and as the world normalizes. I also think that in the domestic investment world, you will see a greater allocation to fixed income. So there's going to be a limited amount of money. And stuff that is already well owned will struggle to find new buyers in this kind of an environment. So, in short, buy at any price, kind of an argument, I don't think will work. But I'm a value guy, so my answer is biased to that degree. But I also believe that you have to look for ideas which have already not been bought into significantly, and that is going to be a significant determinant of alpha generation this year. This is not a hunker down in safety kind of a market, which is typically when quality tends to outperform, or small amounts of growth, even at punchy valuations, tends to do well. I don't expect that scenario. Now, of course, things can go wrong. For example, if my moderation of inflation and moderation in further increases in interest rates theme doesn't play out and inflation goes berserk, in which case we also have to assume that Russia-Ukraine situation gets a lot worse, or there's another front that opens up, China, Taiwan, or who knows, China, India, or something like that. In that environment, yes, of course, high quality, limited earnings growth, domestic market focus will work. So one will have to watch for it. My base case is earnings growth and low ownership will work wherever there is pessimism, wherever there is abject, apathy. I think those kind of themes will work.